welcome all. Thank you for joining. Welcome to another special talks held by the Sanato Tijarat team. Today we have with us Miyan Mansur Mannan Saab. Today's talk will be on myths and realities of Islamic savings and mortgage accounts in the UK. For those who've obviously been to our sessions before, they'll know that Miyan Mansur Mannan Saab is not new to this. He has delivered some talks previously as well, but for the benefit of those who haven't, I will just do his introduction again. So, Miyan Saab is a fellow of the Institute of Chartered Accountants in England and Wales with over 40 years of experience spanning Deloitte, international banking, and Islamic finance. He has played a key role in developing the regulatory and practical foundations of Islamic banking, both in Bahrain and the UK. So before I hand over to Miyan Saab, just a few housekeeping rules. If I can ask everyone to please keep yourself on mute and keep your cameras turned off. Please feel free to put any questions in the chat or keep them in your mind if you want, and we will go through them at the end of the presentation. So over to you, Miyan Saab, if you take us through.
Okay, thank you very much, Surab. Assalamu alaikum. I've called this talk The Myths and Realities of Islamic Saving and Mortgage Accounts. I think when we talk about Islamic finance, and when I talk to my friends about Islamic finance as well, and most people come and ask me questions of Islamic finance, but they are rather stating that it seems to be like a window dressing of just conventional finance. You can't see that the banks are really offering any proper Islamic accounts either in this country or elsewhere. And what I wanted to do in this one is in this talk is just to go through the main accounts that are used, like the saving accounts and the mortgage accounts in the UK, and to show that behind these there is Sharia principles on it, and although they are relatively modified to fit into the realities of the tax and regulatory regimes in this country. And in fact, one of the things that has happened over the last 1400 years as Sharia developed in various countries, the Sharia scholars had allowed for local customs to allow the customs of a country or a particular area to to fit in with the Sharia principles. So there is a bit of a modification allowed under the local customs, and that is what we shall also look at as we go through this. What I want to do is to try to answer some of the questions here. Are profit rates offered by Islamic banks based on Sharia principles or just disguised interest rates?
Sorry, Manoj, just to know, if you are sharing your screen, it's not showing.
He's saying you're sharing your screen.
Oh,
it is showing.
Yeah,
I can see it as well.
Oh, you can see. Okay. All right. Yep. Yeah, sorry. Apologies. On a separate tab on my one. That's fine. All
right. Then the other thing is, how do tax and regulation affect Islamic finance? Are home purchase schemes offered in the UK halal or compromised due to tax and regulations? Okay. So, I'm sorry. So I'll just go through in this talk. I will just do a quick recap of the main principles of Islamic product and services, then look at the saving accounts and then the home purchase plans. I hope I can get through this really quickly so that everybody can have time to ask questions. I apologize at the onset that there are going to be some technical terms used in this talk, and I think anybody who's an accountant will be able to understand it better than maybe others. And then if other ones, if you want more explanation, I can provide that at the end. Okay. So let's start with just a quick recap of the main Islamic products, the main principles of Islamic finance. As you all know, riba or interest is not allowed. That's clearly stated in the Holy Quran and the Hadith. Gharar is something that people are not familiar with, but it is prohibited by Sunnah. It means danger, hazard, or overall uncertainty. The Holy Prophet have stated a number of times that don't undertake a transaction if you don't have the asset with you. I.e., he told the fishermen, don't try to sell your fish before you catch it, because there is uncertainty as to how much you can catch. So therefore, this is what we call a gharar. Then, of course, Misr and Kimar is Misr is speculative behavior. You can't undertake, undue speculations in any activities. And Kimar is gambling, which is specifically disallowed in the Quran as well. And haram activities, you can't invest in alcohol or poker-related activities or tobacco, gambling, etc. Okay. And then Islam requires that your wealth is purified through zakat, payment of zakat. And I will just also touch upon justice and fairness, because all transactions need to be undertaken. They must be just and fair between the participants. Okay, so I'm not going to go through in great detail because this is just the basic principles. The result of the prohibitions and the principles is that as Islamic finance is asset-based, all transaction must be based on asset that exists at the time of the transaction, but must be clearly defined and have value. This is to avoid uncertainty in the transaction. Like you can't, sell a house unless you own it. Just an example. The other main thing that I think everybody must be aware of is that investors have to share the risk and participate in any losses. One participant or one partner cannot guarantee the return of capital to another partner. That is critical. Then, of course, you can't engage in haram activities, so these are all allowed in the zakat. Okay. So just to compare between an Islamic and a conventional banking model, in a non-Sharia compliant banking system, what you have is a customer gives a loan to the bank then lend it out to the borrowers, they receive interest and they pay interest. Okay. There's riba on all transactions here. Funds provided to borrower could be used for non-halal activities, and the banks also use depositors' funds for speculative tradings. If you compare that to the Islamic model, what we have is the customer invests using Sharia-compliant contracts with the banks, and the banks then invest those funds using Sharia-compliant contracts with the borrowers or people needing finance. They get a share of the profit on the parties they have invested funds with, and then the banks share part of the profit with the customer. So in this case, the contracts are Sharia compliant. The funds provided to borrowers have to be used for real assets and only in halal activities, and the fund providers share risk with the borrower depending on the type of contract used. So there's a big difference between non-compliant, non-Sharia compliant banking and compliant banking, Sharia compliant banking. These are some of the products which I use. I won't go through these in detail because we'll come to them later on. So coming on to the basic Islamic saving product, the object of saving accounts, right, it applies the Sharia principle, is to, first of all, avoid any riba or interest, and also uncertainty, which is gharar, and earn profit from halal activities. So most saving deposit accounts are based on the principle that bank provides the expertise to invest the customer fund and earn a return for its services. The customer share any profit, but also take full risk of any losses on capital invested, unless the bank is grossly negligent, in which case the bank has to make good any losses. Okay. And as I said earlier, this is a fundamental Sharia principle. The provider of funds, anybody who investing capital, they bear the risk of any losses on that capital. The main Sharia agreements that are used for saving accounts, and in the UK these are widely now used, but one is called a mudaraba. Mudaraba is like a partnership, but it is something that has been used even in the time of the Prophet ﷺ. Okay, this is where the bank acts as an investment manager. Technical term is mudarib, and the customer provides a capital for Rabbi Mal. The profit generated are shared based on agreed profit sharing ratio. So in this case, the bank and the customer, right, enter into an agreement where they share the profit from any investments that are made. In case of loss, the bank does not earn any return and the customer bears the full amount of the loss. There are two types of mudarabas. One is called restricted, the other called unrestricted. The restricted mudaraba is, simply, let's say the bank and the customer agree that we will buy a commercial property, okay, and we will rent it out and earn income. In that case, what the bank will do is that it will say, okay, I'm going to take, let's say, 10% of the profit, you take 90% of the profit. But it is a specific transaction, and you know that this is only one investment, and there is one customer, and the customer is locked into the investment. So the customer can't just keep coming and going out from that investment. It is locked in. So this is called a restricted investment. This is not used for saving accounts because you have different parties coming in, taking money out, bringing money into deposit accounts. So they use what they call an unrestricted account. This is where you can take funds out, put money back in, whatever. So this is unrestricted. And this is what is mainly used in the UK for saving and deposit accounts. The other type of agreement that is used here is called wakala. And wakala just means an agency arrangement. So the agent is a vakil and investor fund given by the customer, who is technically known as the muwakkil. The bank earns an agreed agency fee, and the balance of any profit is paid to the customer. So in this case, it's not profit sharing, is the bank earns a fee and the rest goes to the customer. Okay, in the case of a loss, the bank still earns its fee. Whereas in the case of mudaraba, if there's no profit, the bank doesn't make any money either. Okay. But this wakala arrangement is mainly used for large deposits and fixed period treasury accounts. The profit rates normally stated are the target rates. If you look at any Islamic banks, when they quote your rate, profit rate, they always state this is the target rate, not the actual rate that you will get. It could be higher or lower. But the question is, how can banks offer target rates and then normally pay you that particular rate? And the so what are we going through? So in both mudaraba and wakala agreements, okay, since the banks pool together the funds received, as I was saying earlier on, okay, from customers who have different amount of deposits and different liquidity needs, from 1 day to fixed term deposits, they need to act with justice and fairness when distributing any profit among them. And this is very important because when you talk about justice and fairness, you have to allocate profits to the customers in a fair and just manner. And the way that banks do that, right, and this is where I'm sorry, I'm going to go in a little bit of jargon, technical jargon, right? This is where they use what they call reserves. So there's one thing called a profit equalization reserve. So if a bank makes a profit in one period, they will put part of the profit and take it to the future period because customers coming in the future might not benefit from the kind of profit rates you're earning on those transactions. So let's say if you invested in the bank has invested in some trade transactions, right? It might not, that trade transaction might not pay the same returns over a period of time. Okay? So for that purposes, the banks will take some profit from this period and then allocate it to the future period. And if in the future period the profits are lower, they will take from the reserve and add it to the reserve. So this is called equalization of the profits. The second thing they do is they take they so also set aside any specific risk they know. I mean, if they know the customer is going bad and is not going to pay, they will actually set aside a reserve for that before they distribute any profit. And finally, there's a weightage factor. The banks will say, okay, any customer who's putting money in, large amount of money, they will be given a higher rate than a customer who's putting small amount of money and only for, let's say, a day or two. I mean, on instant accounts where you have the right to take the money out on even on a daily basis. So there's a factor. So these things, these three techniques the banks use when they actually come to distribute and calculate the profit that is given to the customers. Okay. And in particular, the transfer to or from the profit equalization and the investment risk reserve, as well as the weightage, enables the banks to smooth out profit and achieve the target rates of return quoted on different types of ground. So the banks have quoted some rates for you, but they will use these techniques to smooth out the profits over time and between customers so they can achieve the kind of rates that they have already indicated to you. And of course, they will have only indicated the returns once they're done all the budgeting and everything, and they think they can achieve those rates. Okay. So, I mean, I just set up an example. I'm not going to go through the calculation in detail here, but just to show you that unlike the commercial banks where they just pay you interest, the Islamic banks actually have to go through a calculation to come out with the profit rates. And I mean, if somebody is really interested, I'll go through this in more detail later. So this is for a Mudaraba account, and then for a Wakala account, again, similar kind of calculations. And then, as I said, they will take out profit equalization, they will take out investment risk reserves, and then they will distribute the profit. Okay. The only difference between the Mudaraba is that there is a share of profit between the bank. Okay, so here the bank takes out a share of profit. Let's say they agree to take 50% of profit. They will take out that share of profit before they start distributing, before the calculations are done for the investors. Whereas in the case of Wakala, the bank will just take a fee. Okay, and this is where one techniques come in, and I should have also explained this earlier, is that in a Wakala arrangement, what the banks do is they will have set out in the agreement that if they achieve the returns that they have indicated to you, or target returns, that any profit above that, they will keep that as their performance fee or the call incentive fee. So let's say in this case, the total profit was so much for distribution. This is what they've agreed to pay to the customers. Anything else which is left, they will keep it as an incentive fee. So in this way also the banks are able to achieve the rates that they want. If let's say they have given you these rates and they have nothing left here, of course they won't get anything, or they will get very little of incentive fee. Okay. So as I said, as example shows, there is an underlying profit sharing arrangement that enables a bank to set the target rates and then pay those rates. This is not like the normal commercial banks where they just pay you the rate. Okay. Said at the bottom here is that this is totally different from the payment of interest by non-Islamic banks. Right? Those banks simply pay the interest rate agreed upfront, regardless of the banks makes a profit or loss. In case of an Islamic bank, if you make a loss, if the bank makes a loss, there won't be any profit sharing with the customer. And I've seen there have been examples where the customers have not received any profits. Though it was on I mean, it doesn't, very rare that happens because the bank will try to ensure that they have invested the funds properly for the customer. Okay. Now, as I said, there are in the UK and other countries where there are taxes and other regulations, right? These have to be taken into account when the banks offer the terms and conditions for the saving accounts. Okay. the taxation in the UK, in fact, the UK was one of the first countries to develop taxation for Islamic products. This is going back way back into 2003, and also at the time of in 2004 and 5, when they actually spent a lot of time, the government spent a lot of time in formulating the tax regime for Islamic products. Okay. They said the aim was to achieve a level playing field so that profits earned by Muslims are given the same treatment as conventional uh, uh, interest that's paid by the other banks. Okay. In the Finance Act, just for another jargon, okay, in the Finance Act, this is called alternative financial arrangements. And what the government has done is that it has set out a description of these transactions, like I talked about the Mudaraba agreement and the Bakala agreement. These are actually set out in the Finance Acts. Okay. And but what the government says is that the profit earned on these transactions are stated to equate in substance to the return of on investment of money at interest. They had to do that because for tax purposes, right, they they charge tax on any interest you earn, and you can claim tax, right, if you're a businessman, right, or right, on any interest you pay. So they have to say that these are equivalent. They're not exactly the same, but the profits paid and earned are equivalent to the interest that the conventional banks pay. Okay. And what is the practical consideration for this is Islamic banks need to provide returns that are similar to rates offered by other banks. So one of the conditions is that they should be commercial rates, not exorbitant high rates or not exorbitantly low rates. The banking regulations, that's again, here we have a modification to the rule that, in case of a loss, right, as I said, the customer has to bear the loss. But the problem in the UK is the banking law requires that the bank guarantee the return of the principal amount that is invested. So any amount, let's say you put 10,000 in the bank, the banking law requires that the bank pays back that amount to you. Okay. And then there is also, I think many of you know that the government, the FCA, has a financial services compensation scheme, and that any money that you place with the banks up to 120,000 now is guaranteed to be paid back by the government. So if the bank fails or the bank goes under and they can't pay, then the government will pay up to 120,000. Now, in terms of Sharia, okay, this is a no-go because the customer is supposed to pay the loss. Okay. And what we have done in the UK here, and this is one of the things that was agreed very early on in around about 2006, was the FCA agreed that the bank can state in the agreement that they're required to make good any losses, but the depositor, who's a Muslim, right, can refuse to take that compensation. So let's say the bank says, I made a loss, right, and your share of the loss is £10,000. The customer says, well, under the law, you got to give me the £10,000. But the bank says, well, if you're a Muslim, do you really accept to be given this £10,000? And I say, well, no, I'm a Muslim. I accept that I have to take the loss, and I won't accept that loss. So this is a modification that has been done for practical purposes in the UK. And in fact, when you look at the terms and conditions of the banks, right, they actually, sorry, let me just go back. So when you look at the terms and conditions, right, of the Islamic institutions here in the UK, they set out the Vakala agreement, they set out the terms for all these things which I have talked about. Okay. And they also state in there somewhere that, if you're a Muslim, right, we can offer you to make good your loss, but you can refuse that loss. So that's very important. So I know many people when they open up accounts, they really don't go through the terms and conditions. But for Islamic banks, it may be useful to go through the terms and conditions, see what the banks are doing in terms of complying with Sharia. Okay, just moving on. The other product I wanted to talk about was the Islamic home purchase schemes. Again, many people come and say, well, it's not really Sharia. Okay, they're just charging you interest, but disguising it as rental income or Sharia compliant charge, right, to the property that on the home, on the mortgage that you have taken out. But let me try to show you why this is somewhat, but not a bit modified, but it complies with Sharia. Okay. So again, the aim of property finance in accordance with Sharia principle is to avoid any interest and uncertainty, and to avoid any other terms used by conventional bank, right, which are not allowed under Sharia. The finance is normally based on two well-established Sharia contracts. One is called a musharaka. Okay. This is musharaka, it just means partnership. It's a contract between two or more parties to invest in an asset or a trade and share profit and loss. Okay. So one partner is normally appointed as the managing partner. Like in this case, you would appoint the bank as the managing partner. Okay. And the partnership agreement can allow for one partner to purchase a share of the other partner. And this, in again technical jargon, is called diminishing musharaka. And then the other agreement that is used for in this home purchase schemes is called ijara. Ijara just means leasing. When you lease or rent out an asset or a car, okay, it's called ijara. And here one party buys an asset and then leases it to another party to earn rental income. Okay. The rental charge can be fixed upfront or is set on a periodic basis. So, so as I say, I'm sorry about all this jargon, but one has to understand this in order to show that we are compliant with Sharia principles. So, most of the home purchase schemes offered in the UK use a modified version of the Sharia agreements. The bank and the customer enters into a diminishing musharaka agreement to fund the initial purchase of the property, with the parties agreeing that the customer can purchase the bank share over time. So what happens is the bank, let's say, says, I will fund 70% and you fund 30%. So the bank and the customer will, buy the property, right? And the property will be owned 70% by the bank and 30% by the customer. But the bank will agree that the customer can buy the bank share, let's say over 20, 30, whatever years that they agreed, okay, or right at the end, like they can buy the share of the bank. Okay. And then the bank and the customer, now what happens here, because the bank owns part of the property, let's say 70% of the property, okay, how does the bank earns its profit? It earns the profit by entering into an ijara agreement with the customer, whereby the bank charges a rent to the customer for the share of the property owned by it. Okay. So at the beginning, let's say they will charge 70% of the property. They will say, okay, I'm going to charge you so much rent for using 70% of the property which I own. But as over time the customer buys the bank share, then that rental will also go down. Just to give you an example, I mean, try to do it here in the diagram form. So step one is that the customer will identify the property and agree the purchase price from the seller. Okay. Step two is where the bank, let's say in this case I put 80%. The bank purchases 80% of the property and the customer purchases 20% of the property. Okay, together. Okay. Then the step three is the bank leases his share of the property to the customer, who pays rent for that share. And then step four is where the customer buys the bank share of the property on a monthly or on a periodic basis, right, over the term of the finance. The question obviously that arises is at what price does the customer buy back the share of the property from the bank? The second thing is as you know, in the UK, when you buy a property, you have to pay stamp duty, right? And it is paid when you first buy the property. So what happens? Does the customer have to pay stamp duty when it buys a share from the bank? Right? That's a question that we have to look at. And how is the rental amount calculated on a periodic basis or less on a monthly basis that they have to pay? So, sorry. Again, I'll just go through the text and regulations, and then we can understand what's going on. Okay. Again, in the Finance Act, right, the home purchase plan or the Ministry Musharaka arrangement is set out. Right? And it says that if these are properly met, then the purchase of the bank share of the property by the customer is exempt from stamp duty. There is no double stamp duty paid. So stamp duty is only paid once. And this is one of the great, actually, I would say, breakthrough in the UK when the Islamic mortgages came out. Because the thing was the bank, had to buy the property, then sell it back to the customer over time. And, there was a disadvantage to a Muslim customer because the bank had already paid the stamp duty, and of course the customer will have to refund the bank for the stamp duty, and then it again had to pay the stamp duty. But what happened, what the Finance Act did in 2003, was that it said there will be no double stamp duty. So there will only be one payment of stamp duty, but you have to comply with certain strict regulations that are set out in the Finance Act. I'm just giving a very simple example. Sorry, to tell you quickly about a story how this came about. Is that there was a Bank of England governor called Eddie George. He was giving a lecture to some Muslims about how to invest and that they should be investing their money or access funds, and they should be buying their own property in the UK. And there was one old man and woman who got up and said, "Dear sir, we have never been able to buy a property." And he said, "Why? Don't you have the funds to buy? And won't they want to get a mortgage?" And they said, "Yes, but the thing is, first of all, the mortgage is not Sharia compliant, and secondly, we have to pay double stamp duty." And that triggered the whole discussion on, that they should be allowing Islamic mortgages in the UK and modifying the Finance Act, or sorry, the stamp duty regulations in order that the stamp duty is only paid once. Okay. Now, the second thing is the rental charge with the bank under the Injara agreement is again in the Finance Act stated to equate in substance to the return of investment of money at interest. So the bank and the customer in a buy to let situation treat the rental as equivalent to interest and not rental received or paid. So this is again something that the government on the one hand said, yes, we allow you to do some mortgages here, etc. But what you charge a customer has to be commercially viable. You can't just charge a customer any amount of rent. It's got to be commercially viable with other institutions. So, what is the practical consideration? Sharia guidance does not start at. In fact, the Sharia guidance does not set out any specific rules for determining the rental amount, as long as the customer and the bank has agreed how to calculate the rental amount over a period of time. So if you say to the customer, okay, I'm going to use a certain base, let's say the Bank of England rate, I will use that to calculate the rental I will charge to you. That's the basis. So there's a clear indication how the calculation is going to be done. As long as there's a clear indication how the price or the rental is going to be charged, right? This is what Sharia says. There's got to be no ambiguity, uncertainty in the way you calculate the rental amount. And for tax purposes, as I said, the banks have to charge a commercially equivalent rental to the interest that other banks charge on their mortgages. So they can't just say, okay, you pay me at equivalent to 10% when the market rate is something like 5%. And therefore, the banks normally use Islamic banks also referred into the agreement to the Bank of England rate, and then use that as what they call benchmark in calculating the rental charge. Now, the other thing is on the sale price or share of property owned by the owned by the bank. Right? As a customer buys the share of the bank's, the price that is paid by the customer to the bank, right, for the share that the bank owns, right, is normally fixed right at the beginning. And one of the reasons is that under Sharia, you have to avoid any, as I said, garad or undue uncertainty. But more important is that in order to avoid any double stamp duty, right, the price paid when the property was purchased must equal the total price paid by the customer to the bank over the period of the contract. And that is as set out in the Finance Act. So here, right, you can't just say, okay, the property price has gone up. The customer should pay higher amount to the bank when they buy back the bank share, or the property price has gone down and therefore you pay less, is because you are going to come against regulatory and tax issues in the UK. So there are other arrangements that are used from home purchase schemes. Right? One is called a Muharaba arrangement. This is where the bank buys a property and then sells it to the customer at a profit with payment due on an installment basis. In this case, you know exactly what you're paying over a period of time. And these are normally used for short-term arrangement, like 5 years arrangement, not very long-term, because otherwise the banks are going to lose money. Again, under these arrangements, there is no double stamp duty. Okay. When at the end of the Muharaba agreement, the customer buys the property from the bank. Sorry, just to explain. In a Muharaba arrangement, the bank buys a property, right, and then sells it to the customer. Okay. So there is double purchase. So the banks, when it buys the property, okay, it will pay the stamp duty. But when the customer buys it back from the bank, there is no double stamp duty there. So that is exempt. And the profit charge is, again, as I said, normally fixed to equate to commercial rate of interest in the UK. So I think this is my end of the presentation. And I'm sorry for all the jargon used, but in order to show that we are actually using Sharia principles and Sharia agreements in offering both saving and deposit accounts as well as mortgage services, right? All this jargon had to be used. So I'm open to questions.
Thank you so much for that. I think the topic is extremely interesting and it's a very, very complex. I think that there's a lot to understand with this, and I think if you look at it, I think people who have been, I think most of us are used to this capitalist way of living. And me, for example, I spent all my life in the UK and only working within, I guess, within the banking industry myself, and with insurance, that I've been able to get a comprehensive grasp of just what this industry looks like. But still, it's far, far more complicated than my understanding. I'm sure if I speak to an accountant yourself, you'll be able to say all sorts that would sound like a different language to me. And there's people in the UK who have lived here all their life, but they wouldn't even understand how a basic mortgage works, or how a credit card works, or how savings works, or even some of the most basic products, because there is very, in some instances, people have very small financial literacy, right?
Right.
Now, when Sharia finance has come into place, And one argument I definitely hear from the Western side, I don't know if you'd agree with this, is people argue that this stuff has been made complex so that the average person cannot understand it and they cannot, I guess, understand the system, try to gain from it, in whether it be how to make your tax more efficient or whatever. So when I guess Sharia was introduced, the Sharia finance, it still seemed like it's very complex, or has this become complex at a later stage, or was this initially done as so everyone could understand it?
Okay, Islam developed very fast, right, and expanded very fast into various countries. Okay, then over the years, right, you had different schools of Islamic jurisprudence. So you have the four main schools of Islamic jurisprudence: Hanafi, Maliki, Shafi, etc. Okay, and they all have a different way of understanding and explaining Sharia. And in the Holy Quran and in the Hadith, of course, right, transactions, certain principles have been laid down, but not exactly how you do a transaction. So, I mean, there's a basic principle, as I said, about musharaka, partnership. Okay, but when you look at the way partnerships are done, where the various complexities that come into partnerships over the years, the Sharia scholars had to deal with these complexities, and different schools of thought had given their different interpretation on these. Although in general, there is, there's largely agreement on the Sharia principles and how they apply to financial services and products. And as I said, these have been developed over the last 1400 years. It is not that modern Islamic finance has overcomplicated these things. These were overcomplicated from the beginning. And what Sharia scholars have done now is that they have tried to apply these principles under modern economic systems. And of course, because of tax and other regulations, there has to be a little bit more modifications than if you have no tax or no regulations in those countries. So, I mean, in the UK, as I said, there had to be a compromise. One of the main compromise, one of the sticking points actually for introducing commercial banks in the UK. And in fact, it took a long time before the commercial banks could get authorized in the UK. Was this issue is that for deposit accounts, the regulations require that the deposit be repaid. Whereas under Sharia, if the bank makes a loss, a genuine loss, then the customer loses out, and the regulations will not allow that.
Mm-hmm.
So it took a little time to sort that out.
Yeah.
And as I said, we sort it out by putting a special condition in the agreements.
That's
that,
fine.
The customer has to bear the loss, but the bank has to give the customer a compensation for any loss, but the customer can refuse to take the compensation.
Mannan Sahab, just in the interest of time, we've got a few questions. If you can try to keep your answers obviously as short and succinct as possible. So someone's asked that they might be missing something here, but if the rental rate is linked to the Bank of England interest rate, how is this Sharia compliant if we are using an interest rate?
As I said, the Bank of England rate is just used as a basis for calculations. It is not, you could use they could use average rental rate in the UK, right? Or a the CPI index, okay, the inflation index, or some other index you can use to set the rate. It is just to give clarity to the calculation. If somebody can come up with a rate which is, calculation which is more clear, then you can use that. I mean, why they use the Bank of England rate is because, as I said, under tax regulations, they have to offer commercial rate, or they have to charge commercial rates on the facilities that the banks have provided. They can't just go off and charge you, let's say, as I said, 10% on the account when other banks are offering you 5%, commercial banks. Okay. And another thing is that banks, of course, Islamic banks have to be competitive. Okay. They can't just say, okay, we're going to charge you 10%. No customer will come to them. They have to be competitive with whether the banks are charging. And therefore, they will adjust their rates or the rental rates to accommodate the competitive market. And normally the banks in the UK, they use Bank of England rate to work out what they charge their customers. And that's the basis that Islamic banks also use.
No, Jazakallah, thank you so much. Another question is, what is the view of non-Islamic or conventional banking system of UK and Islam's point of view? Is it completely haram, or can you just do it with certain regulations or considerations?
I'm sorry, can you repeat that?
So what is the view of non-Islamic conventional banking in the UK when we look at it from Islam's point of view? Is it completely haram, all aspects of it haram, or can you do it with certain regulations or certain considerations in place?
Okay, one thing I should say is that some of the conventional banks in the UK do offer Islamic products. Okay, they do offer Islamic mortgages. Others do offer Islamic investments. They also offer Islamic. They used to offer Islamic deposit accounts. So there is there is they do that. You just have to search for them. There used to be what they call Islamic windows. Most banks used to have Islamic windows, but over time they've shut them down. Let's say HSBC was one of the main ones in the UK. But the people who were running the HSBC Islamic side, they left and they moved to the Middle East, and therefore they stopped windows in the UK. Another thing was it was getting more complex. As I say, the agreements and everything cost a lot of money to set up an Islamic agreement. So that's why they found it not very competitive to offer Islamic accounts. But in terms of just saying, looking at, as I showed you earlier, right, was that if you look at the way the conventional banks work, okay, and the way the Islamic banks work, you can decide yourself whether the conventional banks have any halal activity going on with them. Mm-hmm. Now, one of the things is, of course, that if you have shortage of Islamic banks, or the facilities provided by Islamic banks now in the UK are limited, you can then, of course, keep your money with other conventional banks, because there is a shortage of accounts or the products that are available in the UK. That's quite true. Even now, there are not many Islamic banks here, and not all of them are offering very good services. So to keep your money safe, it's right. You can say that it's better to keep the money with the conventional. The only thing I will say is that this is something that I think most of our MDs will be able to do, is that the scholars over years have said that if you earn interest on any account, or unhalal or not halal income, then that you can still call yourself or say that you're complying with Sharia by giving away that non-halal income as donation. So as long as you give that money away as donation, so if you earn, let's say, £2,000 interest on your account, and you say, okay, I'm going to give that away as donation, but that is you're cleaning that's what they call cleansing your income and cleansing your assets, and giving that away as donation, then that is fine.
Jazakallah. I know we're very short on time, but there's some more questions that have come in. So again, just if you try your best, just keep them answered brief. Obviously, I appreciate these are not easy questions as well, and need a lot of explanation. But the next one is, what is the reason Islamic mortgages are not available to all mortgage advisors in the UK. It looks like only financial advisors specializing in halal or Islamic mortgage are only able to offer these, and conditioned to be more strict, and it is more expensive compared to these conventional mortgages offered by high street banks.
Yeah, I mean, it used to be the case that Islamic mortgages, let's see very quickly, Islamic mortgages used to be more expensive than what you get from conventional banks. If you look at one of the reasons why it's a little bit more expensive, especially on the legal side, is because you tend to have these various agreements, okay, that are used in these Islamic mortgages, and in the conventional mortgage, you just have a simple agreement. The the other thing is why there are not many advisors they give. I mean, I think in the Jamaat now there are many advisors, financial advisors who can advise you on taking out Islamic mortgages. But as I said, this is a specialized area. People have to understand these things, and financial advisors are uh, uh, under regulations not to advise on products they can't understand.
There's another question which I think maybe links to what you've just said. You mentioned that there's a lot of AMD financial advisors, because someone's asking if you can recommend any investment accounts to start with. So I'm assuming you'd ask them to reach out to one of the, I guess, financial advisors that we have.
Yeah, there is Ali Mahmood, there is Mohammed Anwar. I mean, there are advisors. I can send you the links.
Yeah.
Well, Khalid, sorry. Yeah, I can send you the links.
Yeah, that's fine. We can try to send these out. And another question is, what is the future of Islamic banking in the next decade? Is it too complicated compared with the Western system? Do you see it growing? Do you see it shrinking? What's your views on this?
The view is that the Islamic banking is set for growth, but it used to be very little. It's estimated in the UK to be around about 15 billion now. Internationally, Islamic banking was only counted in hundreds of millions. Now the market is valued at around about 4 trillion, and is one of the fastest growing market, right, in the financial sector. Its growth rate is estimated to be around 25% per annum, so it is a growth market. In the UK, of course, the more the Muslims use the facilities, the more it will grow. The government is trying its best to make sure that Muslims do not just keep the money under the mattress. Okay, they actually put it into financial into circulation through the banking system, and that's why they spend a lot of time in developing and making sure there is proper tax regimes for these and regulations for Islamic institutions here. But I mean, you have to attract. I mean, the more there is demand, okay, the more this the industry will grow. I mean, the Muslims today represent about 6% of the population, and the government has estimated that the Muslims will represent more than 10% by 2050. So there is going to be a larger share of Muslims in the UK, and hopefully their demand will also grow. I mean, there's a lot of interest by young people in Islamic finance now, and you can see a lot of websites devoted to this, and a lot of new products or online products coming on for meeting various demands.
Jazakallah. Look, I think we are coming towards the end of the session. The poll has gone out. If I can ask everyone to please make sure you put in your responses. Manan Sahib, Jazakallah once again. It's a I know this is a very difficult subject, very complicated structure. Jazakallah for your efforts in trying to explain this. And yet we will be back again next week, inshallah, for another Sabda Jismani talk. So Jazakallah all for attending. Hope you found the session to be informative, and inshallah we look forward to see you again next week.
Assalamu alaikum.